Hey, what's up, everybody? This is Chef again, and today, I think what I want to do, I want to explain a little bit more of my strategy and the way that I look at charts when it comes to zones and the trading strategy in general, as to like how I come in and look for things. Right? I like very simple things, and I don't like to overcomplicate things. I know a lot of traders out there have indicators, and some traders look at the news, and other people get biased because of what's happening with the economic situations and things like that. But in general, in order to understand a zone, you see these little boxes here and stuff, right? So I'm just gonna give you a little brief explanation, right? Just some random little yellow boxes. So I have them yellow just because it's a nice color on the chart, and it's a little off by the green and red. And my mentor, Don Francho, he is somebody who uses yellow boxes. And so I picked up the style from him, and I incorporated a lot of the things that I've learned from being a retail trader into a zone trader, into taking off all the indicators off my charts and taking off the bias and taking off the the FOMO and the chasing and all that, and just creating a system that makes sense to me, right? And I'm just going to point out these boxes, right? Well, what is a zone, right? Anything that comes inside a zone, I like to look for a buy area, right? Now, there's different types of entries. Now, I'm not going to sit here and explain every single one, but just a quick example. If we run up and then we start to come down, what happens is the minute that we come down, this is your type 1 entry, which you're catching a falling knife. Type 2, you wait down here for a little base to be created. And type 3, you wait for the breakout. So this is where a lot of the traders come in for the third breakout, and they like to pop like this. So it's based off supply and demand, right? The demand, it can be a big area. Yeah, like look at this, right? So it goes from 44 all the way to this 43.70, right? That's a big area. Imagine if you would have bought here, you would have been red coming down. And let's say you average in right here and then it drops, you're technically adding more risk, and you still stopped out on a perfectly good trade. So it all depends on the type of trader that you are in order to capture these type of trades. Are you the trader that's going to catch the falling knife right here for the first test at a demand? Or are you the one that's going to wait for the bottom of the base to actually hold? Or are you the guy that's going to take the safer trade and buy the breakouts on the type 3 entry, right? That's how you got to view it. Now, some of you guys will say, like, well, can you trade in between the zones? Of course you can. You can trade buy here, buy a put, right? Write it down here, take profit. You can come in here, buy a call, write it here, and take profit. You can buy a put and then write it back down into here. You can buy a call, buy it into there. You can buy a put, buy it, sell into here, and vice versa. So you can trade the in between if you like, but that's why I always say, buy time on your contracts, because if today is Monday, right, and then we hit a type 2 right here on Monday, and we ran in here still on Monday, you still have the breakout on Tuesday, Wednesday, Thursday, and Friday to get back up into this 45. So you have a 100-point move for the type 3 breakout, and giving you a nice swing and momentum trade into the next day. So it just depends on what kind of trader you want to be, whether you want to scalp some weeklies, some month contracts, whatever it is you're trading. As long as you're following the plan and you're understanding what type of trade you're taking, that's all that matters, right? Sometimes personally, I like to wait for the bigger breakout. So I like to wait for this breakout, because sometimes what happens, let me take this off, is this thing ranges like this. Okay. So you get a range trade like this, and you have a supply out top and a demand on the bottom. And then what happens is this top area ends up breaking at some point. Okay. So you get that type 3 breakout. See, the type 3 changes here, right? So you go type 1, 2, and 3 in the bottom of that zone, and you can go again type 1, 2, and 3 on that top zone. So regardless of how you see it, there is still a trade in between, and it's a matter of what you are going to catch as a trader. Sometimes the breakout of a base like this makes more sense for me, because the bigger the wider the range, the longer it takes inside a range like this sideways. Okay, the longer it is, the better it is, the more momentum, the more accumulation. Whether it's distribution or accumulation, is going to break one or the other. So on the break here, or on the break here is going to have a huge pop. Okay. This is the point of accumulation. So you can find this on smaller time frames. You can find it on the 5, on the 1, on the 10, on the 3, on the 20, on the 30, the 1, the 1.5, the 30-second chart, whatever it is. You can find this specific setup anywhere as long as you have charts moving. Okay. Personally, I like to grab the 4-hour time frames and the 50-minute time frames where I can grab a nice rally-based rally, drop-based drop, rally-based drop, rally-based rally. I mean, it's all kinds of stuff, right? As long as you break over that specific base. Like I said, you can trade in between the zone, up and down, or you can wait for that breakout type 3, to the downside, whichever one comes first, right? So giving you that specific breakdown, look at the way that this is setting up right here. This is why I like candle bodies, right? You're going to ask me how to chart candle bodies. Well, I like to grab the candle bodies right here. See the candle body? I don't really grab the wick. This one I did it because it was based on the 15-minute. So I have the top of the candle bodies here, and then the top of these candle body here with these wicks right here. So this one actually gave us on the 15 a nice base. So that's why I kind of had this highlighted, right? So on the 15-minute time frame, like I said, you can find this anywhere. As long as you have a base, you're legit ready to trade, right? Like I said, a rally-based rally or a drop-based drop, and you find it anywhere. Now I'm gonna give you an example. Look at this. Here's your drop. Here's your base. Here's your drop. Drop, base, drop. What kind of trader are you? Did you grab a call here? I personally did grab a call. Did I get stopped out? Yes, but I knew automatically that the minute that I stopped out, I would go a lot heavier in puts, and I did just that, made my money back, and I was done. Okay, I did that in 1 or 2 candles on some ODTEs, and you're basically done for the day. But again, you zoom out on the bigger picture, and you're still able to use the same exact levels that we used in the past. So this all here is still a nice demand. As you can see right here, we came down, we snapped back inside a perfect level, and then we came back inside and closed right on that top. So now we're just trading sideways, which is good. This is what I like to explain, that now the trading strategy comes with understanding. I don't need an indicator. I don't need news. I don't need to get biased on anything. I don't care what the world is doing. As long as we're breaking above or breaking below. It's very, very simple. Now, like I said, you can trade the insides all you want, but are you the one that's going to wait for this breakout, or are you the one that's going to wait for this breakout, right? That's how you set yourself up. You buy puts on top, stop out right below, automatically switch and go to calls, right? On the bottom, same thing. You buy calls. If it breaks below, switch automatically, and then you go down to puts, and guess what? You make money on the put side. Yes, you'll take a loss on the calls, but you'll make money on the put side. Yes, you'll take a loss on the put side up here, but you'll make money on the call side once it breaks above, right? So this is just an example on, the trading strategy that I have based on zones, based on break of the bases. That, like I said, you can find these anywhere, right? So now what I'm going to do is I'm going to switch into the 4-hour, and just so you guys can see a clear picture of what it may look like. And what I'm going to show is I'm going to show you a few tickers that actually looked at right now, and they have these nice bases, and I will show you exactly what I like to wait for, whether it's on the smaller time frame or the bigger time frame, right? So the first one is I'm going to go to is PayPal. Make this simple. Like I said, remember, no indicators, no nothing. I don't use any of that stuff. Look at the way that it's moving, okay? All right, so I'm going to take this off now. I don't need this. Take this off. All right. So what I'm going to do is look at the candle bodies, right? What are the structures? Here is some structure right here, that pre-market, okay? Look at the way that this thing bounced here. This is why I was looking at PayPal today in general, because I did grab some calls, all right? So let's go look. And again, I'm going to use this pre-markets right here. I'm going to use this high from the from that day, previous day right here. And look where we close, right there inside, okay? Now that we have this nice base, I'm not looking at the wicks, I'm not looking at patterns, although it does look like a little bull flag or a cup and handle, whatever you want to call it. right? Cup and handle, bull flag, I don't care. Whatever you guys want to see it, however you want to view it, totally up to you. But this is what I see. I see a nice base, a retest right here, and then a build of a base right here. So what's going to happen here is that when this breaks above with the bullish markets, this thing is going to do a green candle just like this. Well, why do you make it so high to that 96.27? Well, let's go look. Look at these candle body structures right here. Boom, candle body structures perfectly, right? Here from zone to zone. This is what zone trading is all about. You go from one base to the next base and you're able to hold these positions. That's why I always say that when you buy a contract, you buy some time on your contract, whether it's 2 weeks out, whether today's the 2nd, and you can buy, let's go see. All right, so you could go to, this is a weekly contract, May 6th. You buy 2-week contracts would be 13th. You buy 3 weeks, you buy 20th. So totally up to you how much you want to capture that move, okay? You always want to buy the first one. So if this thing is at 91, all right, you want to go to a trade tab, go to May 13th, and you want to buy this first one, this 92 call or that 91 call, whichever one comes first, whichever one is preferable to your account size. That's the one you want to grab. You don't ever want to grab anything further unless you're doing more than 1 month contract out, okay? Either way, you still have opportunity to make that choice if you want to grab those weekly contracts and write it all the way up. Just know that it gets a little more emotional when you're doing that specifically, all right? So yeah, I just want to show you this on PayPal, and yes, this will be on my watch list for tomorrow, and we'll see how this one plays out, right? The next one is going to be Facebook, and I want to show you the results of something that I charted the other day. I'm gonna take that off. So all I did right here was grab this candle body right here. All right, and I want to make sure we stayed above this piece, okay? All right, so let's take that off. I'll take this off right here. All right, so this is what I had right here. That right there. So I use this candle body here as a top. And then I use this candle body, this pre-market, because these two candle bodies are lined up. And look at the way that the candle bodies are formed. And the minute that we broke right here, this 204.40, 204.50, we ended up rallying some more, and we ended up filling up all the way into this wick, right? We're shortly off, but let me just show you the way that is built. Remember, these two candles weren't here. So we had the candle body spaced inside, and then the candle wicks right above. So once we broke, like I said, here's your type 3. Here's your type 3, and then now you wait for that fill all the way up here. Okay, so you want to grab these candle bodies here. Boom, that becomes your targets. Okay, so your target 1 right here, target 2 right there. So you get that fill. So this is considered now your rally-based rally, okay? So now you're taking a nice trade based on the candle bodies, not the wicks. The wicks are becoming more of your targets. And once you start filling those wicks, that means that those orders that were there in the past are not there anymore. Meaning that in this case, this was a bearish position. What happened today is that there was no bearish positions available to drop it all the way down. So all the call positions came in and they rode it all the way to the top. So yes, expect Facebook at these highs right here of 217.70, even just round it off to 218 or even 220, honestly, probably tomorrow, right? So giving an example of the results. Now let's go check out Netflix. Netflix is a beat down ticker, right? But why does it catch my attention today? Okay. Check this out. I'm gonna delete these lines here just so I can give you a cleaner picture. All right, so here's the candle body right here. See how the bottom, they're lined up pretty nice. All right, so you want to mark those candle bodies, forget those dang wicks. And this now becomes your area of buyers, okay? Here's your buyers. So this becomes your bottom zone. This is your demand. So if you wanted to enter anywhere on Netflix as a good price point, that's where you will enter at 189.95. So you just want to look at the 190, kind of just round it off as a whole number and set your stop loss right below. Whatever you can handle below, but just don't let anything go below 190, okay? Now look at this top, okay? This one gets a little bit tricky, but look at this. Now this one is a little tighter, okay? some of you guys are probably going to ask, well, how wide does it have to be? Or, is there a specific size? No, there's no specific size. It's just a matter of having candle body structures all together in one specific area, just kind of like these bottoms, all in one area, all in one area. Here again, we rejected the top, we still touched that wick here, closed inside, right here, closed up top. Here we rejected, here we kind of rejected as well on the pre-market, but we built those candle bodies and we built a nice structure for Netflix, right? Some of you may think, well, I still have this huge gap fill. Well, I don't care about your gap fill, okay? What I care about is the accumulation phase. If people are going to be buying here, then I want to know about it. So now it becomes a bigger zone, right? If this is going to be the bottom for Netflix, then cool. Then I want to make sure that this holds. And once we break this, I'm just going to say 200. Once we break 200, then we're going to go for the next structure. Well, what's going to be the next structure? Well, check this out. Here's your candle structures. That's your structure right there, 208 and potentially, what is that? You could just round it off to 210. So that becomes a nice target. So from 200 to 210, it could be a nice swing if this thing goes green tomorrow. If it has a green markets in general, and we end up pushing and driving with some momentum in the markets, then I think Netflix will be a great entry over this 200, which would be a type 3 entry over the breakout of a base out of a zone, and ride it all the way to 210, okay? And remember not to trade weeklies. You could trade weeklies, but guarantee you that you'll be in and out of that position real fast. If you were to buy some time, you'd be able to hold the full position even through that pullback and not get stopped out because of theta or because of anything like that. So you might just do this and then, automatically get stopped out here. And then the rest of the day just, does something like that. So that's what you got to be aware of. Okay, so that's going to be Netflix. I'm going to show you another one that's building a base. All right, it's going to be Shop. Now for this one, the difference between this one is that it does have earnings. So I'm not really looking too much into this one, right? So what I like about this is that we did this. All right, so now what I'm doing is I'm grabbing a bigger piece. Okay, now today, yes, of course, we broke above and look where it landed. There you go. Landed right there. So as you can see, I have all my alerts up here. I had them up here at one point if they were to trend up. But again, this one's a little bit different just because it does have earnings. But either way, no matter what happens, no matter what's ahead of us or what's behind us or what the future may look like, either way, the zone is still a zone, the base is still a base, the range is still a range, and the type 3 breakout is something that a lot of retail traders like to grab because they like buying on green candles. But again, the type 2, you could have bought calls down here. If you would have seen this today alone, you could have just bought the dip. All right. Now let me show you another one. I'm going to show you Roku. And again, I'm going to show you the results of these squeezes as well. And that's why some of you guys, again, I don't chart the wicks because those are orders that were being filled. Those were rejection points. Those were areas of manipulation. Those are areas where market makers are coming in and they're stopping you out. I mean, there's all kinds of stuff going on. There's institutions in there. So I stay away from them, but I do use them as wicks. And I do use them when there's patterns. But either way, today is all about zones and it's all about ranging and this candlestick bodies that will help you in the future to become a better trader and understand where the break is going to actually happen. And this is my style of trading. So as you can see here, right? Look at this day right here. We kind of just range traded in here. We kind of got rejected from the top, and it's the same area. Okay, look at this. Okay, look at the same area. Look where we closed above, right? My next alert's going to hit right here. I knew Roku was green today. So as you can see, once we broke here, this was your type 3 entry. Boom, type 3. Here's your take profit. Look at this. There's your take profit. As you can see, that nice wick dropped down, pulled back, and then closed back inside. And it's still running, right? So how do you find the next base? Well, let's go look at it, right? You're going to say, well, where's the next target, right? So look at all this bottom right here. There's your bottom, and then here's another price target. This one is not a big deal right here, this 106 area. It's basically the inside right here around 108 to 110. That's the area where you want to get inside, and that becomes your bigger target because that's where the accumulation happened. That's where the rejection happened. And that's where buyers gave it all up and they dropped it all the way down to this 75 basically because of earnings. But now, as you can see, every level is playing out here. So this again stays over that 100 level just psychologically, and 102. Well, what is this? 103. This thing is going to continue probably all the way to the highs of 110. All right. Again, this will only happen with a nice bullish market sentiment, and you all know right now the current conditions of the market are very bad. But the futures did close very green, and they had a strong close at closing time at power hour, which was amazing. It had a nice drop, broke below a major level at 41 with no momentum, and then came back in with momentum and closed inside, and the strength is showing. So we won't know to market open whether we're going to gap up or gap down, hold flat, or whatever it is that's may happen. But either way, all the ones that I did show you guys are great opportunities for you to trade. And I don't know, we may gap up pretty big, we may gap up a little small, but either way, that zone still remains. Let's just say, for instance, we do gap up, right? And then we open like up here. The minute we come down, that's your retest entry. Okay, so that's your falling knife entry. At the same time, it's a type 2 because now we're basing out intraday. And what's going to happen is the next couple of days will end up going green. Of course, only with the green market, guys. You know, I'm not telling you guys to go ahead and buy the dip when everything is super bearish. But be aware, be cautious. Either way, use the same levels, because if you do buy the dip there, you'll know that your stop loss is legit right below. Okay, so there's always an opportunity there for you to trade. There's an opportunity for you to get in, for you to get out, to stop out, to get back in without hesitation, and using the same levels because the levels don't change. Candle body structures are the way to go. The zones are the way to go. And you don't really have to think much about it. You don't need an indicator to tell you that that's your entry. You don't need an oversold RSI to tell you that that's a dip buy, because that's at a demand. If it's at a demand, you buy. Okay. If it's at a resistance, you sell. If it breaks resistance, you buy again. All right. If it breaks demand, you buy some puts, right? You just trade both ways. And that's the best way to be trading these markets, because right now what's happening is everybody is, you know, getting a little bias with the trends, and they're saying it's bearish and they're saying it's bullish today, and no, it's going to stay bearish and it's going to continue to crash, and well, whatever. I don't care what anybody is saying. I am following the demand and the supply. And right now, intraday, what this thing said, it said buy. I bought, I got stopped out, I grabbed puts, I wrote it down, made my money back, came back inside. It went back into demand. I got back in. Nothing is stopping me unless it breaks again. If it breaks again, then I'll stop out and I'll get back in puts, right? So it's a process that you just got to be able to follow and be able to trust. The minute we break above that zone, the minute we break below that zone, it's literally going puts, going calls. Don't wait for nobody else, right? And just go for it. But yeah, that's kind of like my trading strategy, guys. That's the way that I like to look at these bases. And to be honest with you, I really don't need anything else, right? Some of you may ask me if I trade patterns. Yes, I trade them. Do I know them? Yes, I know all those things. But what describes me, what brings me consistency, what defines me as a trader is zone trading and trading those bases: a drop-based drop, a rally-based rally, rally-based drop, drop-based rally, whichever one comes first. But as long as something is breaking base, I'm in it. If something is in a base, I'm in it, and it has my full attention. Okay. Other than that, I don't wait for nothing else. I don't wait for the news. I don't wait for none of that stuff that's going on. But I am fully 100% aware of those things. But it's not moving me on a judgmental basis because of price action. Price action is what leads me and guides me and keeps me consistently green. Okay. Yes, I take red trades. Okay. I'm not susceptible to that. I've taken plenty of red trades, but I've taken bigger green trades. So yeah, hopefully that gives you guys an understanding of what I do and who I am as a trader. And hopefully you guys enjoy the rest of the next plays that are provided. And again, I will be in the voice chat. And yeah, if you guys have any questions, please let me know. Okay. And yes, I'm always on the 15 and the 4-hour time frame and the weekly time frame. Other than that, I don't care about any other time frame. Cool. All right, guys, y'all stay green. If you have questions, like I said, make sure to tag me in the chat. All right, guys, have a good one.